all the time in this industry. It's a mirror. It's going to show you that you aren't fucking ready. You aren't ready. If you are looking at me in these live streams, calling out these levels and observing specific things and taking your attention to these very moments to watch that, that's not a fucking trade. There's no secret code language I'm giving any of you. Nudge, nudge, here, this is a fucking trade. I can't make it any more plainer than this now, okay? You're watching how price delivers. How it moves from one point of interest to the next within a specific time window. Over time doing that, okay? Over time doing that, you will start seeing things that you don't fully appreciate right now because you've seen it multiple times. Me pointing to fair value gaps, just look at the trolls. Oh, it's cherry picked. But then when I'm calling them live and it reacts off of it, they are silent. If you're pushing a button or chomping at the bit, impatient to push a button to get some reaction on the things I'm talking about, when the only stage you're in right now is this tape reading. Tape reading is no fucking trading. Not a demo, not a paper trade, not a funded account, not a live count. If I'm talking about buy-side liquidity in the first 30 minutes, what you're doing is you're weighing and measuring the ability for the price to want to get to that level. If it doesn't go there, what did I teach you yesterday? If it fails to go to a specific inefficiency, consequent encroachment, or buy-side, if it's failing to get up there, it's showing you what? An unwillingness to go there. So what's it going to do? It's going to go the other direction. So you're weighing out what the market's trying to work which side of the opening range is it trying to work on. Look at the first 30 minutes of ES today. Where did it spend the majority of the time in that first 30 minutes? The upper portion. And it was unwilling to clear out any significant run above the two buy-side liquidity pools I had your attention to. So how do you know within the first 30 minutes which side to trust? I gave you a 5-minute order block. Watch that. See if it wants to respect that. And I said, watch the volume imbalance. And I said, breaker. How many fucking PD arrays was that? 3. Oh, shit. For the note takers, for the people that are listening and taking fucking notes, they're saying to themselves, oh, shit. He did say when 3 PD arrays fail, you're fucked. It's going the other direction. Nobody said it was a fucking long entry. Nobody said buy it. I said watch, observe, study, see what it's doing. See if it respects it. You have to look at price with a lot of flexibility right now, not holding any expectation over yourself or the live streams or what you think you're going to be able to do a week from now. You can't think about it like that. You have to be flexible. Allow yourself to learn this. But you're not going to fucking learn it. You know, here, I'm going to give you a couple of scenarios. Here's what happened. When I was a younger person, and I used to do card tricks and shit with my friends and stuff. I have friends. You know who they are. You're probably one of them, and you fucking know it, okay? And I can see you in my comments on my Twitter space, and I can see you in my comments on my videos too. And you're some of the ones that are sending me messages through Telegram and sending me emails. And I don't mind helping. I don't mind answering a question if it's something that I haven't said ad nauseum. But these things, I have said this a lot. Don't trade. Don't push the button. You're tape reading. But invariably, some individuals, they see somebody demonstrate something. Do a card trick. Hey, look, let me show you how to swing the bat over here. And then they want to grab it and show you how they can do it right away without any practice. And then it's fucking a train wreck. It's impatience. Impatience is going to fucking bury you before you have a chance to even really learn how to do this. You're going to fail, and you might not see it Some of you that are doing these types of things, you think you're going to be the exception. And I'm telling you, that's exactly what young ICT thought too. And I was humbled over and over and over again. You will not be the exception. And I say that with all the love and all of the respect and all of the interest in you succeeding. I want to see you succeed. I do. I swear to God Almighty, I want to see you succeed. But you have to let me help you. You have to let that process unfold the way I'm teaching you. If you do not submit to this process, it's impossible for you to be successful in it. You're going to fail. If you're looking at anything in addition to the things I'm talking about in the tweets, is that a catalyst for you to want to push the button? If it is, if you're thinking, well, if this would have been a trade, you're doing it wrong. Don't ask me. Don't even bring it up. That's why I say focus on what it is I'm bringing your attention to and only that. In your own journal, you add all that extra stuff there. You don't bring it to the equation or the conversation while we're doing tape reading. Number one, I predominantly do not even look at tweets while I'm doing live sessions or when I'm doing these types of things here. Because invariably, I'm going to see something that's going to fucking trigger me. And it's either going to take me off the topic I want to tackle, or it's going to cause me rage. Because I see someone, and I know some people are going to come here that are new, but I see some names that repeat. I've recognized you with either liking a tweet or retweeting something or commenting to someone else. So you've been around for a little while. You've heard me say, don't push a button. You've heard me talk about the opening range. But if you're doing Netflix and chill with ICT videos, you're going to not get what you're here for. You're going to have selective hearing. You're going to pick up whatever you think is useful when you have no idea what makes it useful. It's just something that you're going on a hunch. Oh yeah, this is that. This is that order block. This is that fair value gap. This is that new implied fair value gap. Now all you want to be worrying about that now. I have to get this off me. Otherwise, it'll eat at me all day long. When you're trained with me personally, side by side, I did it in the 90s. This is how they got it. And sometimes it wasn't pleasurable, it wasn't fun, it was uncomfortable, but it's the reality. You can't do stupid shit and expect good results. Okay, you can't. And if you're trying to, oh well, come on, man. There was a loss going long. Nobody said go long. I said watch. Trust me, there will be very finite terms where you can judge my approval or not the approval, but the accuracy of what it is I'm looking for. Okay. I will give that to you this year. I will. I promise you that's coming. But in the beginning stages, to get everybody at least on the same foundation, whether you've been doing this for a while or not, whether you're familiar with what I do and teach, it's irrelevant. If I get everybody on the same page, knowing that we're just looking at price action, we're not trying to forecast the actual high and low. We're not trying to time in entry. We're not doing that because this skill of finding your individual trade setup and entry, that's a unique thing. Not all of us are going to have that same entry. When we do sessions where I tell you, okay, you're going to use this PD array with your demo account, your paper trading, and I'm going to ask you all to share your chart where it shows your entries were in and out. Most of you will not want to do that because you think it's a report card and it's not going to be good enough. And you're going to be scared. You'll maybe share it and you'll see other people doing better than what you did, and you're going to delete your tweet. Don't do that. You're robbing yourself of the best opportunity how to learn this. And when it's uncomfortable, that's exactly what it's supposed to fucking feel like. Every time that you push a trade, when you want to get into a live account, when you trade your funded accounts, guess what you're doing? you're casting your opinion into the abyss of that hard right edge, and you don't know what the outcome's going to be. So you have to desensitize yourself now while everybody's doing the same thing. Nobody's better than the other. You're all in the same stage of learning, regardless of how long you've been with me. If you've been profitable, funded, I don't give a fuck. This year's mentorship is different. If you can't recognize that, even my charter members are thinking, this is something totally different. Yes, this is the brass tacks. But I also know that this type of training is going to weed out the people that are not going to do well. And it's going to do it quickly. But I don't want to see any of you fall behind. I don't want to see you fall victim to yourself, your own character flaws before you have a chance to cope and manage them and replace them with more positive characteristics of a trader or speculator. Everything I'm saying does not translate to an entry. It does not translate to a trade. What you're doing is seeing those moments in price action at the times I'm prompting you to look at them. Study it. See, does it do specific things that you are expecting based on the things I teach on my YouTube channel? The order block shouldn't do what? Shouldn't go past the mean threshold. What happens if it does? That's a warning sign. And I mentioned the volume imbalance below it. What happens if it goes through that? It can do that, but guess how many PD arrays now is failing too? And I said the bullish breaker. Well, if it goes below that and shows no willingness to support anything there, what is it indicating to you? It's going to want to do what? Expand lower. Seek discount. Go look at the tweets, folks. That's why I'm doing it. I'm confused. I can't follow your tweets. Then wait until the session's over. Go back, take every individual tweet and place it on your chart, and it'll make perfect sense to you then. I'm telling you, that's how you're supposed to be doing it. For those that are here watching it live, you have the benefit of just seeing it and looking at it over your chart real time. But there's no disadvantage for those that can't do it, because you literally can take that tweet that's time and date stamped, plot it right on your trading view chart, and you'll see where I was pointing your attention to and how we are watching how it's going to reach to the next level. Then what are you supposed to do with that? What's the benefit? Once it goes there and I say, okay, screenshot this, what are you supposed to be doing? You're supposed to be looking at how much time it took before it repelled away from that level, started gravitating to another level within 5 handles. Does it offer a range of 5 handles? If it does, was there a setup in there that you can identify? What do you mean? I thought you were supposed to tell me. I'm telling you. I'm telling you how to find your setup. Using the things I've taught, what pattern exists in that price run? Well, in the fair value gap that I mentioned this morning, using the 650 candle, time candle, 10 minutes to 7, basically, in New York local time. I mentioned I want to see that fair value gap act as resistance. Then the market does what? Creates a up close candle into that fair value gap. Market moves away, comes back up again, and it spends multiple times trading into the midpoint of that up close candle. For those that have had the charts in front of them, it's the 10:05, 5 minutes after 10 candle this morning. That one singular up close candle. And the subsequent candles after that, it was trading up into both the fair value gap low from 650's candle. And then we had what? Expansion. Reaching down into the fair value gap I mentioned below it. Seeking what? Discount. That candle is formed at the 650 time candle on 1 minute chart. It trades down to it and then blows out the low. And I said, you want to screenshot this and label it 50% of the trade off here. But I didn't take a trade. You didn't take a trade. Oh, what are we doing with all this? You're conditioning yourself and you're logging it When I teach you how to journal, I told you you're giving yourself positive self-talk. You are conditioning your subconscious after the fact using the points of reference that I'm giving you real time as the chart creates these specific things and it draws to the levels I'm talking about. You're screenshotting that. And then you're adding all your observations later on. Not then. You don't have time to do that. You're watching price. Price gravitates all the way back up to the imbalance, which I did not. I was losing my shit when I was reading these tweets. At 9 minutes after 10, that fair value gap on the 1 minute chart, it comes back, reprices to that, does not come back up to the fair value gap formed at 7:05. So 5 minutes after 7, that candle, that's your fair value gap. That was the one I drew your attention to first, below the breaker, below the volume imbalance, and below the 5 minute bullish order block. So we saw price spend majority of the time within the first 30 minutes in the upper 50% of that 30-minute range from 9:30 to 10 o'clock. And it did what? It failed. It failed to take 40/20.75 buy side. It couldn't do it. And then it showed a willingness to do what? Go out below the low of the first 30 minutes of trading. So what we're doing is we're giving the market time to run on buy side. In the first 30 minutes, you don't know what it's going to do. You don't know. So how do you learn to trust these things, ICT? How do you do this and how do you do that? By doing what I'm walking you through in these tweets or in the live sessions. But some of you don't want to learn. You want to be spoon-fed, and then you want to lie to me after the fact. But ICT, you don't understand. This is what I'm really trying to do. No, you're full of shit. You're trying to take a trade. I guarantee you've probably taken 3 trades this morning, and you regret it. And then the move that unfolded, you weren't part of that, and you feel regret. You feel like you got confused and tricked, and I didn't tell you exactly what you wanted to hear. When I'm telling you what you need to hear. I'm telling you what you need to study and observe, because you don't have the experience to know what to do in that first 30 minutes. So the first stage of your learning is submit to that first 30 minutes. That's part of this. That first 30 minutes is much like a Asian session in Forex, whereas Asian range, rather not Asian session, Asian range is several hours in length and time. But the first 30 minutes after midnight New York local time, that's an opening range too. But at 9:30, I'm looking at that opening range. And we've had a large trending day yesterday. We had a large range expansion to the downside. We had our targets reached. So the next morning session is going to be more difficult than it would be on another day. So you have to be very, very careful and demand more insight, more information, because you don't want to be what? In a hurry, impatient to go and chase something. So you have to have a filter, a time filter. You allow for that first 30 minutes. But what happens if it takes off and runs 25 handles? You fucking missed it. How about that for logic? But you don't want to accept that because you want to be able to do every fucking micro move just because you watch some videos. You think that's what you're supposed to be able to do, and that's bullshit. Nobody said you're supposed to be doing that. I sure as hell didn't say that. So you have to have realistic expectations. You have to be diligent about what it is that you're being told to do, what not to do, and live in that. Allow yourself to develop under those controlled conditions. You're safe. It's okay to make a mistake. If you have an opinion about, okay, Michael's saying, watch this level here, and he's pointing out something below the marketplace. Okay. So is it showing me anything in there that would lead to a trade? If you don't see it and price moves, you'll go back and find it in hindsight, and that's still learning. But you don't want to be pushing a button thinking you understand what I might be hinting at when I'm not hinting at anything. I'm just telling you, watch this level here, note this here. These are areas I'm watching on my own chart. I am not putting things out there that are ambiguous, that mean nothing. I'm drawing your attention to the very specific things that I'm utilizing to determine a bias within a narrative. The first 30 minutes, if I don't know right away what it's going to do, I'm submitting myself to that first 30 minutes myself. I'm doing that. But if I have an inclination that it's going to do a specific thing, run for a liquidity, run for an imbalance, then I'm going to go right in there. And as soon as it does it, if it's in the first 30 minutes, I'm in there. I'm doing the trade. But we have a large range day yesterday, and everybody's going to want to do what? Jump on board. So the market will, most times, not always, most times, reach for some measure of buy side. Why? Because if it's going to go down, like I said yesterday, it can go up the purge buy side to allow smart money to assume shorts against that buy side liquidity. I was offering the market the opportunity to present it to me and you by highlighting that 4020.75 and 4024 levels. If it doesn't reach there and you're in the first 30 minutes, nothing has happened. I gave you 3 specific PD arrays to watch and observe. You know, if you've been paying attention and taking notes, for the folks that know I've said this, do me a favor and tweet to me. Yes, you have said if 3 PD arrays fail, that's problematic on a bias or a directional view on price, and it's going to most likely go the other direction. If you know I've said that, please tweet that and say you've heard me say that, because I know I have. I haven't just said it one time. I've said it multiple times. But if I say order block or fair value gap or volume imbalance, if you're here to find something to talk about that didn't happen correctly, you're going to have a whole lot of opportunity to do that erroneously. Not everything I'm referring to is an entry. They're measuring points, balance points, points of reference. That way we see what is the ebb and flow of price. Is it respecting this level? Is it not respecting it? If it goes through it with a lot of speed and magnitude, that is also a characteristic that is important. When we had price return back to that fair value gap at the 9 minute after 10 candle, 1 minute ES, came all the way back up, touched the bearish order block, spent about 4 or 5 candles in there, and then repriced lower, then made the lower low. As it was dropping, I said that we want to see it go through the fair value gap from 650 time candle and then offer, if it comes back to it, resistance. Now it went through the initial low at 1015. So once it takes out that low, we're not interested in seeing it return back to that fair value gap then, because we've expanded and made another lower low. So there's no need for it to come back to that fair value gap that's formed on the 650 candle. To come back to that level is problematic, which is why I said that hypothetically your stop loss on this idea would be 4000.5 or 4,001/2 of a point, to which it returned back to, but not before trading to 39.91 to offer a partial near the low. So 50% of the trade idea that you're logging, you may not have seen the setup, but you know the logic I'm talking about because I'm mentioning it in the tweets. Once everything's done, you take that information, go back into the chart, and you study. What do you see? What do you see? For some of you, you're going to see the consequent encroachment of the low in the candle formed at 9:30. 9:38 rather, sorry. And the market trades up into that fair value gap I mentioned around the 4,007 levels, what it is price wise, but the actual candle for the fair value gap is at 5 minutes after 7. Some of you may see that retracement back on the fair value gap after it made the lower low. That's your optimal trade entry. Leaving the range of that first 30 minutes, not expecting it to come back into it. It doesn't need to. It's done its work by staying in the upper half of it and then failing to go to buy side. It ran out below the low. Okay, so what does that tell us? From a narrative stance, it says it's going to be seeking discount. Price will explore going lower into inefficiencies that are below market price, which is why I took your attention to the candle at 650. That's your fair value gap that was below price. And then the old low. And then once we went through them, 50% of the trade comes off. Why? Why? Because it could go down and take the low, make a lower low, put people on the wrong side selling short on a breakout, and then come all the way back up against the entirety of the daily range. It just so happens it retraces back up into that fair value gap formed at the 9 minute or 10:09 handle time wise, trading back up into the 4,005 level essentially, and then repricing lower to make a lower low. So now we had 2 times making a lower low. Why did I say 39.91 and I think it was 3/4? If you measure the low of 3995.50, which was the initial low of the day, and the 3988 level, which is the top of the next new week opening gap that I gave you yesterday, below the market price. Midway between that, you get 39.91 and 3/4 or 0.75. And as price was reaching down into it, I tweeted you would screenshot this right here, noting that your partial would be there. And then you'd have a limit order sitting at 3988.25, which would allow for what? 3988. Even if it traded to that, the buy limit order would trigger, and that would collapse the trade. But because we had what? 2 stages of offset distribution, that means the market rallied above the buy side above 40.15. Those highs at 840. Looking at your 1 minute chart, look at the bottom of the chart at 08:45. Go straight up from there. Just to the right of that, you'll see there's relatively equal highs on a 1 minute chart. That's a buy side liquidity pool there. The market rallied above that, but failed to get to 4020.75. Spent the majority of the time in the first 30 minutes in the upper half of that range. What range? The opening range, which is the first 30 minutes of trading. If you don't have a hardline bias, if you don't know exactly what you're doing, you wait that first 30 minutes and you just let price tell you what it wants to do. You will not get into high of the day. You will not get into low of the day, and you don't fucking need to. You don't need to. I'm teaching you to do what? Find 5 handles first. That's your first goal, is be able to go into the chart, not necessarily live right now, because that's not even where you're supposed to be at in your development. You should be able to identify where 5 handles are in hindsight. Where's the setups? Where do you see it? Because if you can't see it there, you sure as hell aren't going to be able to see it when it's live. You won't know what it looks like, which is the reason why I'm giving you these prompts to screenshot. That way you can look at it right then and there. At this moment, you have some information to digest. It would be the equivalent of if you were watching it without me saying anything, you should be seeing something right then and there. And then I tell you what the label is, so that way you know this is what I should be observing at that moment. At this instant right here, this is what I should be thinking. Not because you should already know it, but I'm conditioning you to subconsciously retain this as a false memory. You're tricking your brain into thinking you knew this in advance. When I'm calling it beforehand, I'm lending my experience to you. I'm lending it. I'm prompting you to do the things that if you would have known how to do this, you would be seeing this very thing at that instance in time. That very second, that moment in time, this is the part that you should be observing at that moment. So since you don't have that skill set or the understanding of it, that's what tape reading is. I'm literally prompting you to pull out at the very specific times when price is doing certain things that's going to be helpful to you, which leads to what? Understanding how the market moves from one PD array, from discount to premium, from premium to discount, one PD array to the next. But some of you are just trying too hard to do other shit or trade. And you're not just simply taking what it is I'm giving you, which, months from now, if you submit to it, you're going to know how you were trying to make it harder than it needs to be. You're prolonging your learning, not me. I'm every day showing up. But you can say you're showing up every day too. But if you're showing up every day and you're not paying full attention, not focusing on the things I'm telling you to do, and avoiding the things I'm telling you not to do, pushing a button, demo trading. I'm going to say it for the folks that didn't hear me the first couple of minutes of this session. If you share that you have taken a trade, whether it's profitable or losing, do not include my handle in that tweet because I will block you. I don't want to see it. I don't care to know. When I want to know, I'll ask you. Then you can all flood the responses to that tweet when I'm asking. But right now, I need to have the peace of mind knowing that if you're hurting yourself, I don't want to know about it because you're not listening. And if you're making money, you're not learning. The only thing you're doing is getting hopped up on goofballs. And when the party ends in November and you didn't learn how to do this on your own, you're not going to have that experience anymore. You're going to be right back in where you are right now, learning next to nothing, looking at other people, wishing that you could have done what they were doing. And I mean this sincerely. It's not that I don't care about you. I don't want to be bothered by this shit that is a testimony that you're not listening. Just like when I ask you not to call me the greatest of all times and the goat nut, and this shit still happens. It makes me angry as fuck when I see it. I can't stand it. It's like you're calling me a derogatory term. I know what you're saying, but I don't want that. I don't want that label on me. So when you listen to me and I'm doing these live sessions and or calling out things on Twitter, keep the focus on whatever it is I'm taking your attention to at that moment. And then you explore your chart at that moment. Go into those screenshots and what do you see? Remember all the examples of me doing that over the years? Or I'd say, what do you see? WDYS question mark. And I'll show you a piece of price action. And for the people that don't really want to learn or